Today we have Serena Holmes. Serena, thank you for taking the time to jump on the show with us today.
Thanks for having me.
Give us a brief description of what you do currently and a little bit about yourself.
For sure. So I guess it makes more sense to preface where I was. But I used to run my own agency called Tigers for 18 years. And I exited that business by selling it last February. And I moved into real estate in the last few years. So some of that was kind of happening along the way. But now I've kind of pulled the Band-Aid off and I've just moved into real estate full time.
Awesome, awesome. And so with Tigris, can you expand a little bit? What was the agency's full focus? What were your clients like? What kind of clients did you work with?
Yeah, for sure. So we specialize in dynamic event staffing and experiential marketing. So early on, we worked with a lot of telecom type brands. So it could be something like in-store promotions, street campaigns. As time passed, we got a lot more into the experiential. So that could be like viral stunts. Like we did a big viral video for TransferWise, where we literally built a 500-pound alarm clock and then did a 100-person pillow fight in the middle of a building in Toronto and almost got arrested.
Oh,
But the
wow.
video ended up, blowing up like 700 or 800,000 views and did really well. So it was all kind of attached to that. And then we also got into running different street festival fundraisers. We had not street campaigns, but different productions that we did on stage and things like that as well. So it was really diverse. Like it just depended on what a client would come to us for. Like we even had a client that specialized in drywall and drywall compound come to us for the mud tour. And we basically sent three girls around the country for 4 months in a branded vehicle to partner up with different sales reps to go into job sites to promote their products and engage with basically their end users. So we'd never really done something quite like that before, but someone would come to us and
Yep.
we'd just figure out the way to make it happen.
Definitely some larger scale clients here. So not so niche based on some smaller focuses.
It was at both ends of the spectrum for sure.
And what kind of brought you into that? What was the allure of that style of business? Was it something you just kind of fell into, or something that you had always wanted to do?
Yeah, I definitely kind of fell into it. I was working at a gym while I was in university, and someone said, you should really get into promotional work. And at that time, this was before social media. So this is like 2000. So at the time, he's like, I know a woman who has an agency. Like, why don't you touch base with her? And I started doing events with her part time for Appleton Rum and Grand Marnier. So ultimately, you're just sampling products with people so that they can try it. The goal is that they'll love it and then go become a consumer. So I started working with that agency, and then it led into referrals to other agencies. So I usually had a few of them that I would take different opportunities with. And then when I graduated university, one of the companies I was working with had just started, and that founder offered me an opportunity to come on board as a manager. And that led into partnership. So at the time, I was trying to be a broadcast journalist, and I actually declined partnership a couple times, but an opportunity that I had with a radio station here in Toronto didn't really pan out. So I just took that as a sign that, maybe I should seriously consider this. Like it's obviously like an opportunity at hand. I've already been doing it for a bit. So I took partnership with her. And the benefit was that because we were so early on, I think we only had 5,000 in sales in our first year. So instead of buying in like with a cost, I just assumed half of the debt. So I think it was like negligible, like $2,500 or something, right? And then the founder actually decided to leave the business for personal reasons 4 years in. So we had to basically decide, I had to decide. I was at a crossroads. Like we're in the middle of a recession, but do we just take what's in the bank at the end of the year and part ways? Do I potentially entertain another agency to have half of my business that I don't have half of theirs? So essentially becoming an employee, or do I just take the risk and buy her out? So I felt like at that point we'd built up enough clientele and goodwill and things like that to take that chance. So I ended up going that route, and it took about 2 years in total, but I ran the business for another 14 years past that.
Oh, 14 years. I mean, that's a very a very long period for somebody to run a business in any type of business. So it's a great accomplishment for sure. And one of the big things that I hear is it was the networking aspect, right? Like that was a huge aspect for you, just networking continuously. It sounds like that helped to build that relationship and kind of showed you that route and the opportunities, right?
Yeah. And working hard. Like I was always like, kind of scrappy in the sense that I knew I had to pay my own bills. So I was always like, oh, I could make 20 bucks an hour over here or 25. I was like, yeah, sign me up. Like,
Right. Absolutely.
I would always have like 3 or 4 or 5 different jobs all at any point in time,
Yep.
right? So just because of working hard and diversifying, like I was able to meet all of those.
Absolutely. Yeah. And one of the things I talk to a lot of people about is not underestimating that sweat equity, right? You can put yourself into a position where you're trading that time for actual equity instead of maybe just that hourly rate, and taking advantage of that and continuing to grow. And you get to a point to where, like with you, you were able to kind of take over and move into a different route and continue to grow your own business and your own success. So that's amazing. Want to just transition, to where you are now. Now that you're a realtor, what was the reasoning behind that? Did you just feel that it was time to move away from your current business, that agency, and get into real estate, or did you see an opportunity? What was your reasoning there?
Yeah, I mean, it was a combination of things. I had hired a business coach in I'm trying to think, 2012 or 13, because I was like, we've been doing this for 8 years, winging it. There's a lot I'm sure I don't know. So I hired a business coach for $1,200 a month for like 2 meetings. So very costly business coach. And one of the things that she encouraged me to do was take some of the business's retained earnings to invest with. And at that time, she's like, most businesses operate on 3 months. You have like a year and a half. So, no one teaches you to run a business. So I thought, okay, well, maybe I'll be more comfortable in like 6 to 8 months and then I'll figure out what I can do with the rest. So I ended up buying a short term rental in Florida because the dollar was par at that point in time. So I was able to buy it for like $125,000. And I kept it for 4 years and basically doubled my investment during that time. And then I ended up staffing events for a real estate education company in Texas and Florida. So I was trying to figure out my next move and then, was introduced to this company. So that just opened up a whole new world of the idea of real estate investing. So I kind of went into that investor summit knowing I've got some money in my business I want to buy properties with. I've got a big home equity line of credit I can do some other investing with. And then kind of dove in and bought a couple of pre-construction properties, invested in a land development deal and a few syndicated mortgages. And then just from talking to people, I was introduced to a mortgage broker, and that led into private lending. So it had all kind of started going back quite a while. And then more imminently with COVID happening, I was also just had a 3 month old at that point in time. So I just had my daughter right before. So I was trying to take a step back from my business. All the private lending I was doing allowed me to cut my pay in half the previous year. But then when COVID hit, I was like, well, I don't want to take any money out because we have literally nothing coming in. Like we had $300,000 or $400,000 in sales disappear in a week's time, and then over 1 million in our pipeline. So I let my team of 10 go all but one person. And I kept her knowing we wouldn't necessarily have work during lockdown, but I needed support because I had an infant at home. So when we did have the ability to run events again, I knew I needed someone to depend on still. And 3 months in, I decided to sign up for my real estate license because it just felt complementary to everything that I was doing. It would allow me to have access to tools to do due diligence on certain things. So it just was this like natural progression. I signed up with a the girl that I actually promoted to be my mat leave replacement quit when my daughter was 2 months old. So I hired a mergers and acquisitions company to sell the company, and then we went into lockdown like 2 weeks later. So I kept it going for 2 years, trying to sell it. Obviously, very difficult to sell an events company in the middle of a pandemic. So um, coming out of that, I had suggested to them, clearly we're not having luck finding these other random buyers he was presenting to me. And I said, why don't you approach different agencies in Toronto who know who we are and they can kind of assimilate us. And I know we're going to get busy when we're coming out of the pandemic. And then the girl that I kept throughout ended up resigning last January. So my back was kind of against the wall. I was like, you know what? I feel like I don't have it in me to scale back up to what we were. Like we don't have an office anymore. I don't have a full-time team anymore. I have a toddler at home. Like I couldn't see myself like going back into where I was, and it would be a lot of work to try to rebuild. So I basically got a mutual release from that company. And then I spoke to about 12 or 15 agencies, and I had the company sold in 2 weeks. And then we closed 2 weeks after that. So I exited like very quickly. And it's on different terms than I would have preferred. Like it's not like it was a huge lump sum up front. It has a 2 year earnout, but they hit the ground running. I get involved if I have to, but for the most part, like they've done fairly well getting things off the ground very quickly. And they were already doing that kind of work. So it made sense just to take on more work and scale. And then I was able to kind of start transitioning more into real estate as time has passed.
And I think an important, note there is learning when to exit, right? You saw the opportunity to exit, that it didn't fit the lifestyle anymore. And I know we see a lot of times we watch businesses crash and burn when there could have been a much easier exit strategy to sometimes release it.
Well, I mean, it would have been a lot easier if I knew that my employee
Hmm.
wasn't committed. I would have maybe tried to sell it sooner, but I really felt like, I built up my team to a certain size. I have a key person I've had for 6 years that I can trust to run it
Yep.
for a year. And then, clearly she
Yeah.
had other
Yeah. I think
plans.
those outside
So,
factors for
um,
sure.
yeah, so I mean, it would have been definitely, I have
Right.
been relaxing during my mat leave in comparison, not really worrying about those kinds of things. But whatever things happen for whatever reason. So it is what it is. And at least I was able to see it through and then still come out successfully by selling it on the other side. It just had some challenges because there was still a lot of hesitancy and, companies in recovery coming out of
Absolutely.
COVID, right? So I could have entertained that to different agencies had the circumstances been
Definitely,
different.
definitely. And so to go a little deeper into the real estate side of things, what are your focuses now with the current, the economy, the way that things are all over, bank failures, interest rates raising? What kind of strategies are you taking? Has there been a big shift in what you're looking for and what you're trying to approach deal wise?
Yeah, for sure. So I had started with a short-term rental, and then I had a long-term rental that I tenanted in Edmonton and a condo in Langley that I sold on assignment. And the problem with those was that they really didn't cash flow during the time that I owned them. So really my focus right now is to find opportunities that do cash flow, but they can still support the overhead if you can't potentially, operate on
Right.
the original plan. So I'm looking at properties in Arizona, so wholesale properties that you would basically fix up and use as short-term rentals, but you could potentially rent to, insurance companies for longer term stays if they have people that they need to place that, maybe they've had a fire
Right.
or a flood or something like that. I'm also considering Curacao. I'm looking at Tulum. I'm looking at multifamilies and student rentals in the East Coast. So I'm part of a real estate mastermind now with about 70 other very big, like active investors. So I'm also outside of my acquisition exploring opportunities to come on board as a general partner for capital raises on larger projects. So some of them, for example, that could be like a multifamily unit that has like 36 apartments. One of them just closed on 122 units in Atlanta. So they're the very,
Yep.
very big acquisitions. And in these instances, they will raise money from people for the down payment and repairs. And then there'll be limited partners that they'll pay them out passive income during the period of time when the forced
Yep.
appreciation is kind of happening. But I feel like with the network that I've built, I think I would be strong on the capital raise side because I've been on the
Right.
opposite side for so long as a private lender. And I've done close to 60 deals in 4.5 years. So I can talk to people about, how to go through that process and feel
Yeah,
more comfortable.
absolutely. And on your personal side versus, this mastermind, for you personally, do you focus primarily on single family, the long-term rental side, and keep the larger multifamily deals separated from that? Or are you trying to slowly transition to where you can start to take on that multifamily yourself as you get the experience with just raising the money and building that side yourself
Yeah.
as
Well,
well?
I think whatever I'm trying to do, I'm trying to figure out what makes sense from a partnership standpoint. Like I have found a team in Arizona that like this is what they do. So it's like you would put up the capital and then they can do all the work, right? Like obviously
Got
I'm
it.
not in Arizona, I'm in Toronto.
Yep.
So you need to have like the right partnerships and stuff like that. So I think for me, initially I was attracted to multifamily because it just seems to make sense. Again, I'm still entertaining that. I think with the right property manager, you can still take on those things on your own, but I'm not looking to take on some big like underperforming project or something like that.
Right.
Like if I was to buy something like that, I want something a little bit more turnkey, and that's why I was looking at possibly student rentals because just the possible money there. Like one of the investors in my group, he bought a property that sleeps 10, so 10
Mhm.
bedrooms. He bought it for like 107,000 and it
Oh,
cash
wow.
flows $8,000 a month.
That's That's one of those grand slam deals.
Yeah, so there's just the opportunity to cash flow is much higher. You won't necessarily see that appreciation like the way you do in Toronto, but for me, I still want to have a bit of both. So I'm basically at this point, I'm like, not to say a blank slate, like I have a few things that I'm really diving into more and looking into, but that is ideally what I'm looking to do by the end of the summer.
And how are you approaching, one, on the personal side, and then two, with the multifamily? Do you have different approaches on how you're raising the money and how you're going about the purchase? Because I know you spoke about, having these LPs versus the GPs. Do you guys have a certain strategy, or do you guys already have a pool of, investors, and you're more so looking for the properties?
Yeah, so on the personal side, like I do have money that I plan to acquire with because ideally anything in cash, like I want to start building my portfolio
Yep.
just personally. And then on the other side, where I'd potentially partner with other people in my group, a lot of us are members of a big real estate education company. So the Facebook group has probably a few thousand members. So a lot of them capital raised through that. And then that company is constantly bringing on new members. So in some instances, if they're like brand new, like maybe they have money, but they don't have the expertise or the time, then they look for opportunities like this just to make
Right.
passive income. So you can usually bring people in like on, say a property that's worth 6 or 7 million. When you're looking at your closing costs and your down payment and renovation, maybe you're raising a couple $1 million. So you may take 20 investors at 100,000 a piece or something like that. So you kind of run the numbers to figure out how that
Right.
will all work. But again, I feel like that's next level. So I have talked to different people in my group to understand how that all works. But I feel like it would make more sense for me to partner where I'm like, I feel like I could raise the money, but I'm not just going to try to like do this all from scratch by myself because a lot of these people have done it
Yep.
over and over again. Like, why would I
No,
struggle trying to figure it out on
absolutely.
my own where I can like learn along the way with all the people that have been successful at it
Absolutely. And that's
already?
definitely something I've learned, from my experience on some, single family rentals. And I've learned from that experience that making sure that you have a team in place in that area, because what I do is all remote. And if you don't have that team and you're trying to take on the inspections by yourself, the property management, the money, every aspect, it gets to be very overwhelming. And I think that that's one of the things that makes real estate seem so hard to a lot of people, and they don't.
Yeah, I think you want to make sure you've got the right property manager. Like that's key. Like when I had the short-term rental, we had family friends that we bought it through and they made it sound like they'd help us keep it booked and stuff like that. And then they literally didn't bring one rental in 4 years. Like everything I did came through VRBO. Um, they would call the cleaner. Maybe they'd like check in on it. And if anything broke, they called my uncle. So it's like I could have done that anyway. So it really wasn't what I was expecting from them going into it. So it ended up a little, not that to say it was like crazy work, but it definitely put a little bit more on my shoulders than I expected it to. So my next property, like I had a property manager in Edmonton and they just dealt with everything, like the tenants, if there was issues. I think the only challenge I had with them was that the electricity was going up like exponentially. Like it went from a few hundred to like 800 to 1100 to 1500. And I was like, do they have a grow up? Like, what
Right.
is happening? You got to get over there. And it took them 3 months to finally go. And they discovered like this huge space heater in the garage because the winters get so cold there. They're worried that their cars wouldn't start in the morning.
Oh, wow.
But it was like this massive, like it was double and triple and quadrupling the
Huh.
electricity costs, right? So they ended up obviously paying back for that, but it took a while to get the property manager to go over and look into it.
Absolutely. And those are those little things that you don't expect in real estate, and you don't really hear about a lot of times,
Yeah,
all of
and
those
it
little
wasn't a huge
pieces.
problem. Like, I mean, it was obviously something they paid for it, but I knew something was wrong because I'd had the house for 3.5 years. Like, the bill had never gone
Right.
like that, right? Like, you see seasonal fluctuations, but that
Not
was
a
like
double
something
and a
else.
triple.
Yeah, yeah.
Absolutely. And you spoke on earlier about, a HELOC, and that you use that on your personal side for your investments. If you can, just for people that aren't very familiar with it, and I know there's sometimes some bad things. People think that they're extra risky, and there's always a perfect scenario when using certain avenues for your money. But can you expand on just what the HELOC is, and what the importance is to you and how you're utilizing that?
Yeah. So when we bought the house that we're in now, it was in good shape, but like very dated. So like leopard print carpet in the basement, like a lot of peach and brown. So we spent 4 months or 6 months like renovating it top to bottom. And then I had the house reappraised. So we basically forced the appreciation on our own home. So it went up about $150,000. So when I bought the property in Florida, I was able to use money from the HELOC, money from my business that I borrowed, and then I could pay back by the following year, and then money from my tax-free savings account, all collectively to buy the property for cash. Because at that time, I couldn't qualify for a mortgage in the States or in Canada. That's changed now to make it a little bit easier, but at that time it wasn't possible. So I was able to use the HELOC for about half the money up front that I needed. And then as I paid it down, paid the business back, and then just paid the rest off on the HELOC. And then the market went really crazy here. So I had it reappraised in 2017 and it was almost triple what we paid for it. So what was a $150,000 HELOC became a $655,000 HELOC. So I had access to that money, and at the time, like interest rates were 3 and 4% for many, many, many years. So when I joined that real estate education company, they're like, you could be investing in all kinds of things like syndicated mortgages or private lending, and you could be making like 15-20% on that money, paying three, and then you're pocketing the difference, right?
Very passive at that point.
So again, I think my biggest learning was just diversifying. Like there was a mortgage company that they really strongly advocated for. So I did a few very big deals with them. And one and a half of those deals has gone on for like much, much longer than it should have. And now like the back end interest is technically in jeopardy. So my learning was like do smaller deals with more people.
Yep.
And then also just, I would never consider something with a split interest. So in that instance, it was like 15%, but half of it up front, half would be when the investment matures.
Mm-hmm.
But now because they've kind of mismanaged it, I may not see that. And it's gone on for so long, it's like 75 grand at this
Right.
point.
Wow.
So probably not seeing that. But because I've done so much other private lending, so basically supporting other active real estate investors, so they could be in land development, they could be, using it for renovation purposes to basically force the appreciation on single family homes or multifamilies and stuff like that. And then you're basically making again that spread. So in most of these cases, you're like unsecured, meaning that you're not on title with the property, but all of the agreements still list the land and the property. So
Mm-hmm.
there's still a tangible asset. So even though it's not written as secured, if you ran into problems, like you would still go after the property,
Right.
right? So I just try to insulate my risk by doing like a lot of smaller deals with as many people as I can. So right now I think I have 17 or 18 on the go. Um, Done about 60, but like last year I really like went up. I think I did 27 or 28 last year. And then as those deals are coming to a close, like I try to just keep moving the money forward into new things. So at the beginning of last year, some of the deals were like 12, 14, 15%, but now there's things out there that are like 16, 18, 20. So
Right.
I just try to roll them into like higher interest because obviously interest has gone up in the last year.
Yeah, absolutely. And I think that that's a good thing to point out, those smaller deals. You hear so many people talk about a bunch of different ways to do it and going all in on this and all in on that. And I think that that is, one, with diversifying and having multiple ways to make money, it kind of looks the same way in that aspect because you're not just counting on that one deal to make you the money that you need for the next one and the next one.
That to me is more risky. Like, because
Absolutely.
if anything goes wrong, like you lose everything, right?
Everything.
And I've tried to build up kind of a trusted community. So in a lot of cases, like the companies I've worked with are people that have come highly recommended by people that have worked with
Mhm.
them before. You kind of get to know them. Even some of the deals I have now, like I didn't know some of the people directly, but then we all ended up in the same investing mastermind together. So now I've really gotten to
Right.
know them. So I
Yep.
obviously trust the work that they're doing and like what plans that they have on the go and stuff like that. I'm not just like walking down the street like you know
Right. Just handing out
yeah,
money
like you
to
definitely, there's been
anybody that
people I
wants to
turned
take it.
down because you're like, they don't make you feel comfortable or they're disorganized or the communication isn't where it should be. So I think you still have to, do whatever due diligence it is. Like I look them up, I'll get their identification, we'll do credit checks, we'll look at the insurance on the properties. Like
Yep.
there's things that you can do to hopefully mitigate that risk as much as you can.
And that's definitely something that is probably one of the biggest factors in business and real estate and anything. Pay attention to the risk. Make sure you're mitigating that risk, not just looking for, or like the old saying goes, if it sounds too good to be true, it probably
It
is.
could be. I
So
mean, a lot of
don't
people I talk to would probably say that. And sometimes people, I have someone I've worked with for my entire career, and I've really encouraged his family to consider it because his wife hasn't worked in the last 4 or 5 years since they had their second child, so single income, and they're just, I think, too nervous, right? Like even when I brought them like opportunities that are secured, even I was like, just talk to them, even just to see, and they won't even have the conversation with the company. I was like, okay, like there's just so much potential there. And then on the flip side, there's other people that are close to me that I've facilitated those introductions to, and now it's helped them out a lot, right? So I think it just has to be, you've got to be comfortable with it. But some people are open to it, and other people just flat out will never be comfortable with it.
Yeah, and I think that you too, we always hear a lot of good things about real estate. We know there's a ton of people that make great money, have very sustainable businesses, and then it just takes that one, bad story where they think it's going to happen over and over and over, and things are going to happen. It doesn't matter if you work a job, it doesn't matter if you own a business or you're in real estate. There's going to be something that happens at some point in time that you're not expecting, but that's why that risk mitigation is a big factor. And like you said, not putting all your eggs in one
Yeah,
basket.
and what I like honestly is the tangibility of real estate, right? Like there's a physical asset, there's physical
Yep.
land. To me, it's like I know people that are talking about crypto and Bitcoin, and maybe they invest in stocks, and you can be successful with that, but there's so much volatility, and literally, it's like anything can put that in one direction
Yep.
or another. So for me, like that hasn't been my preference. Obviously, people do it, but that's the number one thing I like about real estate. And historically, it will always continue to go up. So even right now, they're bringing
Right.
prices down. But guess what? There's too many people and not enough houses. So eventually, it will go back up, just like a pure supply and
Exactly.
demand, right? So I think
Yep.
that there's a lot of assurances and confidence in that sense, compared to like other things that you might try to invest in.
Yeah, absolutely. And I think that's a good point of, if you want to get into real estate, you don't have to jump into this, extreme. Don't go straight to
I'll have
multifamily.
to be a
Don't do
landlord.
this. Right.
Yeah.
You can get a property, hold it long term. We know statistically that it will continue to go up. And as long as there's cash flow to be made, or you're at least breaking even at the most extreme point, then over the next 10 years, 15 years, 20 years, the appreciation is going to be there, the tax benefits for owning the properties, a lot of benefits. So there's, that risk gets smaller and smaller and smaller. So
Yeah, I mean, I honestly want to buy a house for my daughter, like for her education fund. Like
yeah.
we have an RESP right now, and we'll let that grow to, maybe 20 or $30,000, and then I could buy something in the East Coast and let that cash flow and appreciate. And if you can have something that would be worth something so much more, or you keep all the savings from it during a period of time, like that's going to grow far more than just
Yep.
in like a government issued education fund.
Right. Absolutely. And I think that's a good point too. The like you speak about that diversification and just starting. That's the thing. Start now, do your research, do the due diligence, and really just start. That's what it comes down to, is just taking action. And I see it a lot with real estate, more so than a lot of other things, is it's just this wheel of trying to find the best deal, trying to find a perfect deal, trying to do this. It's not really going to be perfect, but that
There's
taking
always going to be
action.
challenges, but I
Yep.
mean, there's always challenges with everything,
With
right? And
everything.
even for people that don't have money, like if you have the time, you can joint venture with someone that maybe has the money. So that could be one way that you put up the capital. Or there's people doing like Airbnb arbitrage. So you
Yep.
find a unit that would be in a high demand area. All you have to do is go in and furnish
Yeah.
it, basically, convince them to sublet it or allow you to sublet it, and then you could be making like pure cash flow with no down payment up front.
Yep.
So there's a lot of people that have been successful with those things as well, if they don't have the money to put down on a property.
Absolutely. And speaking of those things, the, wholesaling, long term, short term, arbitrage methods, for somebody that is on the edge, they're trying to decide if real estate's for them, what way to get in. What, in your opinion, is an easy entry and a good starting point for somebody that wants to get into real estate and start to get some experience and learn?
Yeah, I think just educating yourself. Like for me, a lot of things changed when I joined that real estate education company. And then when I got my real estate license, I started sharing content from other people, and it put me on the radar of the person that has this mastermind as well. So there are a lot of groups out there with people that are very successful in different ways, whether it's self storage is like huge right now,
Hmm.
doing all these different things, but you can learn from them, build the connections, and then look at what you have to bring to the table, right? Like maybe you do have the time to go out and find the properties, or maybe you've got, whatever it may be, like whatever your skill set is, but you can learn from all of those people to figure out the right next step, right?
Right. Yeah, and I know there's we'll call him an influencer that talks a lot about these methods and has a certain method to where there is an opportunity to make money in real estate in almost any way, either giving money, either supplying earnest money, finding deals and bringing them to people. There's a way to get in, and it's just finding where's your risk tolerance. If you can withstand this amount of risk, well, maybe these options are best for you. And like you said, the
Yeah, and the
education.
time that you have is a big
Yep.
thing. Like, I didn't have time. Like, I had an infant at home, right? So I didn't have time to consider too
Right. You don't
much,
want to do
you know?
300
So
cold
for me,
calls.
that's where the private lending was big. Like, I needed the passive
Yep.
income, right? So there's a bit of work up front to do the deal. And then after that, you just get your monthly
Right.
deposits. So beyond that, it's not like you're getting calls about things. It's just like there's very low barrier to entry. Again, you still need money
Yep.
of some kind. It's not like I had a stack of cash in the bank. Like I had equity in my home that accumulated. Even now, like it's been 6 years since the house was appraised last. So maybe I'll go to the bank and get it reappraised and could probably open things up a bit further, right? So it just depends on what you have access to. If you don't necessarily have anything, that's where I think joint
Yep.
ventures come in, right? And just finding people that maybe even in your own family have access to things themselves, and then you can find ways
Right.
to do that.
Absolutely. And that, that's a big thing. A lot of people don't realize or maybe aren't familiar with with OPM. There's tons of ways to find money. Your friends and family, if you have good credit, there's ways around it. You can get the loans, you can pull money off zero interest credit cards. There's ways to get the money. So sometimes it just takes, being a little
Creative.
creative.
Yeah.
Exactly. Just be a little creative and you'll find a way to force yourself into a deal. And then obviously the network on top of that. You've got to, you're not going to find these deals where people have made $1 million, 2 million, $3 million on a couple of deals by just sitting at home
Yeah,
being in your
agreed.
own
I
world.
mean, there was one couple that I met the first year that I joined this real estate education company, and they got on the map pretty quickly because they got in a car accident on the way there, and the car actually like rolled, and
Oh,
they showed up
wow.
with, these what are they called, like the neck
Oh, the neck
guards
brace.
or
Yeah.
yeah, the neck braces, and anyhow, they bought I think 90 properties, so 90 doors in their first year
Wow.
with other people's money. I think they're at up to around like 240 or 250 properties now, but they approach it from joint ventures, vendor takebacks, seller financing, and literally, so using none of their own money, they've amassed
Yep.
this huge portfolio, and now they're just teaching it to other people because they've been so successful at growing their portfolio and stuff like that, but literally using none of their own money.
Right.
So
Exactly. And I think you touched on, seller financing. People are just a lot of times just not very educated on it. And I think that that's one of the easiest routes. Maybe you're not good with your communication yet to go out and raise money. Just start having the conversations with seller finance, them being your bank and just holding that for you, making payments to them, or, the objects of subject to being able to assume those mortgages. Like there is an avenue, and like you touched on, it's just education. Go educate yourself, find out as many ways, and the one that sticks out to you, just explore it a little bit. You'll figure out if you're good at it or not.
yeah.
um,
Yeah, it's a lot to learn. I mean, I think again, it's finding that network to work with, and even with seller financing, it's finding the right deal where a seller is willing to do that because
yep.
obviously if they're selling, sometimes they need that money to buy the next property, right? So it's trying to figure
Yep.
out where those relationships are and opportunities are. But I think anything is possible if you put your mind to it.
Absolutely. Absolutely. I want to kind of transition and just let you tell us a little bit about your book and, what the details are, what's inside, and, just give us a little bit of details on that.
Yeah. So it's called The Accidental Entrepreneur. It came out at the end of 2021. When I joined this real estate education company, they also had someone there that was talking about like ghostwriting. Like she was a ghostwriter for the E Myth by Michael Gerber, and had this pretty
Okay.
big network of books that she'd been part of. But she was basically selling a writing retreat in San Diego. So at the time, I was like, I have always wanted to write a book. Like, I had a really crazy childhood, and everyone had always said, like, you got to write a book one day. Like, and then I became an entrepreneur, and obviously, there's like a lot of things and lessons that come along with that. And I feel
Yep.
like a lot of the things that I went through in my childhood kind of paved the path to embrace entrepreneurship. Like, it's definitely not for everybody, but I feel like I was
Yep.
always seizing opportunities in that way. So I went to the writing retreat. I ended up writing, I think, 17 or 18 chapters of what became 31 chapters. And in the months that followed, I kept on writing and getting it finished. And then I basically hit a wall, and I didn't really know how to get it published. So I basically shelved it for a while because that was in 2018. And then when COVID happened, I thought, okay, well, I'm going to get my real estate license, but I'll do a course, do the exam, and then between courses, I'll take a couple of weeks off and work on like editing and getting it published. So I found a company that could support me with the editing, the design, the marketing, and all of that stuff. So I basically rotated through those two things until it was ready. Um, and then went to market. So it's basically kind of like my story of, all the crazy things that I went through. Like, my parents separated when I was 4 years old, and my brother died in a really tragic accident about a year and a couple months after they had separated.
Wow.
Moved around a lot between different family members and stuff like that. So just again, laying that foundation of how those challenges helped me to, embrace those opportunities as I went into entrepreneurship and running a business for myself.
And that's one of the things I've been very interested in myself is those journeys, right? The things that we went through as children into teenagers and the things that shaped us into this. And I feel a lot of times that entrepreneurs, not that their stories are the same, but there's so many similarities that have shaped somebody into being able to manage stress, being driven, having this creative mindset. And so I just feel like those are the big things, and people want to hear that because it definitely helps us all realize that, we're not alone.
Yeah, and it
We
humanizes
A
it, right?
lot of
So I
us.
think it shows,
Right.
like when I was pre-promoting the book, I would, share different excerpts from it and do readings and things like that prior to it being published. And I had a lot of people reach out just talking about the things that were resonating, like, I've been going through a custody battle, and, how will this affect my kids? Or like, I've been going through this. And, people reached out on the different things that touched them. And then as it got into
Yep.
like the business side, it obviously has a lot of relevant lessons and stuff like that for people that do want to pursue running their own business, right? So there are a lot of things that you can encounter. And I think, again, one of my biggest lessons was just trying to find help sooner. Like, I didn't have a coach or mentor until about 8 years in, and I just kind of made things up as I went. But
Right.
I could have found a much easier path and learned from people that have already been there, and probably
Yep.
expedited our growth. It is what it is, but I think that was one thing that I definitely wish I could have looked into sooner.
And I know it's like a saying, there's two ways to, get to this level of success, and that's fail faster or hire a mentor that's already done it. So learn the lessons they've already learned, or just keep going as fast as you can, because you're going to fail. You're going to have to learn those lessons. So you can do one of two things. And, I think that's one of the great things about, writing the book, sharing things like that, is putting that information out here. Look, I went through this. Here's where I'm at now. These are the things that happened along the way. You can get through them. You can get to this point, and we've all got that inside of us. And like you said, reach out, find somebody to, if it's just to talk to somebody, if it's just to learn, to listen to. And I think that's like podcasting now. I think that's why it's gotten so big so fast, is that people want to hear those stories. They want to get the information, and a lot more people are taking action
And they
now.
may
I
not
mean,
have
we
the
see that.
resources, right? And every coach, like I had one coach and I think three or four mentors. And I think the most successful mentorship I had was that he was very tactical. So, he spent 8 hours in our first meeting, like deconstructing my whole business and basically coming up with an action plan. So, like, hire a bookkeeper, do this, stop doing that, delegate this, like looking at the branding and all these different things, right? So, to me, it wasn't just like having a sounding board and complaining and trying to figure things out. It was like, it was very strategic. And in fact, he
Yeah.
was a marketing consultant, and his company would go into like call centers and like find things that were broken and find efficiencies and stuff like that. So that's literally what he did for me. So one of my first tactics was hiring a bookkeeper because it was draining way too much time. So I'm not a bookkeeper, but I didn't know how to communicate. Like, from week to week, we could have 10 people to pay or 200 people to pay. Like, how do we communicate
Right.
all these transient part-time brand ambassadors that come and go throughout our business, and how do we pay them effectively and quickly? So we came up with like a Google sheet where we kind of pencil in the people that would be, we kind of know this is coming, this is what's going to be owed. We don't know who's working. My account managers would schedule
Right.
them in once they're there, and then the bookkeeper would take it and process it. So I was trying to figure out that little piece, but I went from, a couple hours to 2 days a week to like hitting a button and transferring money.
Right.
So
Yeah. So
it
much
was so
easier.
much easier. It allowed me to not be chained to the business anymore. Like when we went direct deposit, like I started taking like longer holidays because I didn't feel like I just had to be there to sign paychecks and stuff like that. So the technology was there at the same time. And even just then delegating to my team, like I stopped planning events, like started hiring up account managers and account
Yeah.
coordinators and stuff like that. And just trying to record everything that you do. So developing playbooks for each role in the business to not only explain like what has to happen, but literally like visually, like this is how it has to happen. And aside from just onboarding people more easily, it allowed us to ensure consistency. So if one person's off sick, anyone can jump into their file and know exactly where things are in the project so that things aren't falling through the cracks. So that was something that helped us as we started to expand and grow and take more people on.
And I speak on that a lot of times, just those SOPs for somebody like me, like everything that we did in the business was all remote. We use a lot of different VAs, we use a lot of different people, and none of us are in the same place. So having those step by steps, the visualizations, the videos, the pictures, this is how you do it. And that, like you spoke on right before that, being able to transition yourself from working in the business to working on the business and taking yourself out of it. And the only way you're going to be able to do that is with those processes and being able to hand it
Yeah, so it
over.
took like 10 years to get there. Like, like I did start taking on employees like right after my partner left. But beyond that, like it was about 10 years that I started to be able to take the step back and focus more on sales and like, the overall company and how we wanted to be and stuff like that, rather than just, I was doing a bit of everything,
Right.
right? Like bookkeeping, planning events, hiring staff, like paying them. Like
Yep. And it's like, as an entrepreneur, sometimes it's hard to let go, like, but it's a very,
it was very
very
hard
big
because you
thing.
feel like it's like, your reputation or things on the line. And there was definitely instances and even clients that we could have lost because of something that wasn't done maybe the way that it should have been. But it's not scalable to always fall on you, right? So I feel like I started to have more of like a work-life balance after 10 years. Like I was still very immersed in it and still, you have busy times, but it definitely wasn't the way that it was in the first 10 years.
Absolutely. I love the journey. And with the book, where can people get your book if they want to get a copy, if they want to, check this out?
Yeah, so I have got a link tree. So it's Linktree/Serena Holmes author. And then it lists all the retailers. So obviously Amazon being the number one, but there
Yep.
are like a whole list of different retailers depending on where you prefer to shop.
Okay, awesome. Well, Serena, I just want to go ahead and wrap it up. And, just with one thing, if there's one just brief thing that you could say for, entrepreneurs right now, like just some type of motivation, what would that one piece be for you? Something to really just get somebody started or help them keep pushing forward. What would you say to somebody like
Yeah,
that?
I think for me, there was a couple things. Like one thing we didn't talk about, and this would be on a tangent, but one thing I was so happy I did was get a travel visa. Sounds really stupid, but you spend so much money like putting through the visa, and I probably have redeemed like 60 or $70,000 worth of travel. So that was like a
Wow.
personal kickback. So I think when you're in the business, like yes, you're working on the business and building things, but don't neglect yourself. Like there's things and incentives that you can take advantage of as an entrepreneur. So from a tax planning standpoint, there's things that you can do creatively to offset expenses, like as many things that you can run through pre-tax, like gas, your car, your cell phone, like run as many expenses through the business as you possibly can is one thing. Take advantage of incentive cards like that because there was a lot of times like you want to take a holiday, but you know, do we want to spend 10 grand? Well, it's only going to be 2 grand. So we'd go,
Right.
right? So taking advantage of all those things and then trying to educate yourself for the time that you do want to take that step back in the business and trying to find ways that the business will help your future in the long run. So outside of just the day to day in the business, like looking at things from the standpoint of like when I started investing, that kind of opened up all of these other doors. And now where I am, it's like I really haven't, I've never worked less in my life. as this past year, but I made triple I did in my highest year of my business. So,
Right.
I
Working
think just
smarter,
being
not harder.
strategic and like, not to be selfish, but as a business owner, you are taking the risk, but try to find
Yeah.
all those different creative ways that you can benefit from it as a business owner.
Absolutely. Yeah. And I think, just touching on that, that is a huge thing. Don't neglect that work-life balance. Like it does matter. And having a good social life, having a good family life will benefit your business. So utilize it as much as possible. Well, Serena, I appreciate you coming on. I hope that you can get into some of these, much bigger deals with the mastermind you're in, and, look forward to hearing that you've closed on a 200 unit property soon, and well on your way. So we appreciate you coming on today.
Great. Thanks for having me.